Boy, oh boy, that time flies when you're having fun. It's about that time of day again here, folks. My name is Joseph James. It's Thursday evening, January the 10th. Welcome back to your nightly newsletter. You know, I help new traders just like you earn consistent profits every day using a simple 3-step trading strategy that we execute together in our trade room. And my plan this evening is to identify the best opportunities setting up for tomorrow's trading session. And tonight we're covering crude oil, S&P, Nasdaq, gold, and euro. Crude just completed the big market objective. So we're waiting for the bulls to take some profit and looking to reload the guns again down at the key support trend line waiting below. The S&P just retested its major resistance back to its market objective, and even with such a strong move higher on the S&P, I don't want to be buying these highs right now on the Emini, so I'm waiting for a pullback to the low of this channel for buying opportunities tomorrow morning. Nasdaq is also just a few inches away from completing its own retest of the major market objective back up to yesterday's high, which means I'm looking for deep pullbacks for buying opportunities, and we get a great little hidden channel we're watching tonight for tomorrow morning, the Nasdaq. Gold is bearish and running hard back to the range low here this evening. I can't believe how well that range has worked here this week. And of course, my goal is to find some selling opportunities. I want to catch those bulls on the wrong side of the moving average before we get down to those lows tomorrow. If you got caught buying the high on gold this morning, you're going to want to make sure you stay tuned here for that gold chart later on in the video tonight. And of course, euro appears to be bearish this evening. There is some bear momentum to it right now, but digging a little bit deeper on the 6E, right, that euro contract, it's easy to see this bear market might just be a beautiful buying opportunity setting up for Friday morning. Well, speaking of Friday morning, markets are red hot going into Friday's trading session, with most of our favorite markets going back to their major markets objective. A couple of them are still trying to get there, and that means we've got plenty of opportunity and of course plenty of information we need to formulate a reliable plan for Friday's trading session. And of course, as always, I got a great newsletter in store for you guys and gals tonight. We're going to break down these markets one by one by one. Before we jump into those charts though, I do need to remind you, if you're here right now, right on our YouTube channel, make sure you never miss a video by joining our mailing list. And you'll find the opt-in form for that mailing list right here on our blog at sidewaysmarkets.com. I'll leave the link in the description of that YouTube video. Give me your name, your email address, and hit that subscribe now button. I'm going to send you a verification email, so make sure you double check your inbox to make sure you confirm your email, and I'll send you an email every time I publish something new. Also, if you're not joining me tomorrow in the trade room, the next best option is to download all the charts that we have from the video tonight. It's true, all the charts from tonight's video, you can download those charts by grabbing that big button right below the video tonight on our blog here at Sideways Markets. If you're on the YouTube channel, check out the description of the YouTube video. And don't forget, if you have any questions about anything covered in this video tonight, or if you want to give me some feedback about the video, what you like or what you don't like, don't forget to post those in the comment section below, or right, pick up the phone. I'm always here. I'd love to answer your questions. I got a toll-free phone number. I've got live support in the upper right-hand corner. And please don't forget, guys, if you like what you see, please help support this channel by giving the video a thumbs up, share it with a friend, and don't forget to subscribe to our channel and make sure you hit that bell icon so you get notified every time I publish another video. And as always, it is really great to be here with you guys and gals each evening. Hope you guys had a great week. We've had a fantastic week here in the trade room so far. But you know what? Let's not waste any more valuable time. We got a lot of work to do here tonight, and I want to get you guys out of here at a reasonable time. So let's jump right in. Let's take a look at this calendar for tomorrow, and then of course we'll open up those charts and get all prepped up for Friday's trading session. Now, of course, starting off, we look at the calendar here for tomorrow. Tomorrow is, of course, Friday, January the 11th. We made it through the Powell testimony, or not testimony, but the Powell speech today. There's one more thing that's still kind of hanging out there for tomorrow, and that is China. We've had some back and forth between the U.S. and China. Remember, I believe right now we still have a meeting going on back and forth with the trade negotiations at that Shanghai summit. And so we heard a little bit from Trump this morning. We heard a little bit from the vice president or the vice premier in China. It sounds like everything's going all hunky-dory, but who knows? I think hopefully tomorrow we'll hear something tomorrow. I would imagine tomorrow might be a little bit interrupted by any announcement or any press conference, right, regarding any trade negotiations. We heard from Powell today, and of course Jerome, Mr. Waffle, back and forth here. He's completely changed. I mean, we've gone from a week of pricing in a rate hike to now pricing in a rate cut. I mean, it's amazing how quickly the Fed has changed their opinion on this. Right now, it appears there's no rate hikes in sight. Although we did hear commentary today that they will be, data dependent, leaving it open for rate hikes in the future. The market clearly saw that as being bullish today, right? With equity markets pounded higher, commodities pushing lower. So we definitely got Jerome Powell, our Fed chairman in the U.S., out of the way here today. Tomorrow's all about China. Will we hear from China overnight? Maybe we hear it overnight. Maybe we hear it tomorrow morning in the U.S. session. That's going to be the big variable for tomorrow. I'm sure everybody will be glued to their Twitter accounts tomorrow morning, right, waiting to see what comes out regarding the news from China, assuming that we get something tomorrow. Hopefully we will. I thought we were going to hear today, but we haven't obviously heard anything today about that. So looking at the news tomorrow, though, what do we have on the schedule for the news tomorrow? We get the GDP number from Great Britain, probably not going to be that big of a market mover. We get industrial production in India, probably not going to be that big of a deal. The big news tomorrow is that CPI number, right? The consumer prices inflation is such an important part of the fundamentals of the markets, right? Inflation, dollar, money supply, gold, crude oil, all of this, right, intertwines. It's a big news report tomorrow at 8:30. That will definitely get the party started early in the U.S. session. But I will remind you, though, once again, all week this week, the best setups have all come between about 9:30 and 11 o'clock. It's really been uncanny, right, how consistent that's been all week. Big moves between 9:30 and 11 o'clock, and so we do expect to see more of that tomorrow morning. So really, it's stay patient early in the session. Don't force it. Again, if you're in Europe, we may hear about China overnight. So keep your eyes and ears open on that. We've had some great moves in the London session and the overnight session. If you're joining me tomorrow, right, in the U.S. morning session, 8 o'clock to 11 o'clock, we're going to keep on hitting those patterns, right, together every morning, 9:30 to 11 o'clock here. We'll open up at 8 o'clock, but we'll keep our eyes open. But we keep seeing the most patterns between 9:30 and 11. So that will be obviously right on our radar tomorrow morning. As always, tomorrow's a Friday. Fridays are days of early in, early out. Get to it early. Get out of there early tomorrow. I'm sure markets will be waiting here to see if we hear from China. If we do hear from China tomorrow morning, it could be a red hot trend up or down tomorrow that leads well into the afternoon. So we'll have to wait and see, but typically Friday mornings are early in, early out scenarios. 11 o'clock, 11:15 Eastern time is usually about as far as we can take it. So that's the schedule for tomorrow. That's what we're expecting for tomorrow. Will we hear about those trade negotiations? We are walking on eggshells, right, until we get there. Maybe not quite walking on eggshells, but we're definitely excited to hear more about this and kind of get that right behind us. Now, let's open up some charts here. Great to have you with me here. Crude oil. Crude looking like a range for Friday here on oil. And as we go into the charts here tonight, I really want to talk about one major topic, and that is the term markets objective. Markets objective. I want to talk about that because it applies to pretty much everything on the charts here tonight. And again, the term is, and you have to pardon the distraction here, but the term is markets objective. Now, you could call this a bunch of different things. This is just my way of describing it. For example, let's say, we have a nice bull trend going higher here, right? In a bull trend, I want to buy a pullback. We pull back off the highs. Where is the market's objective? The market's objective is to retest those highs. Maybe it's a bear market. Strong bear move down. We want to sell at resistance, right? Sell that pullback. We get the nice big pullback up. Where's the market's objective? The market's objective is a retest of that low. Or maybe it's a trading range, right? Maybe it's a trading range. Maybe we're trading sideways here and we're rotating back and forth. I go to the top of the range, right? We look for the one try, the two try, the failure. Where's the market's objective? Back to the low. We get back down to that low. One try, two try, back in. Where's the objective? The objective is back to retest the high. Right? So we're talking about market's objective. What is the market's objective? The market's objective is mission accomplished, right? Market's objective is the finish line. It's the goal line, right? It's where the buyers with bull momentum want to get. It's where the sellers with the bear momentum want to get, right? Now, why is that important? Well, because, for example, when we go back to look at oil here, right? And we talked about this last night, right? Strong move up. Nice deep pullback, right? I know, you know this, right? There's your 51.50, right? That beautiful spot that we talked about from last night. You 1, 2 back up, 1, 2 back up, right? We talked about that last night. Most important thing though is strong move up, pull back. Where's the objective? Right back to retest the high. Now, when we get to the market's objective, it's important that we take a time out and wait for more information. Is the market going to push through the market's objective? Ultimately giving us proof that these buyers in this example are hungry for more? Or do we see a pullback off the high? And if that's the case, does this become one big trading range? If we go up and then retest that objective and then pull off, it creates a trading range. So we really have to be careful, especially in a market like oil right now, where we're definitely bullish, but where we are, we're right back at that market's objective. And we know there's going to be a lot of profit taking up here. We know there's going to be a lot of sellers that will enter the market, right? Buyers will become sellers taking profit. Sellers will be sellers trying to fade this breakout, right? So on and so forth. So oil is trading right at yesterday's high, which is the market's objective. And that tells me it's a little bit too high to start buying, right? Because the market's objective, that's the target. That's where they're trying to go. Well, now they're there. So we need to wait for a little bit more information. Seeing the bulls, right, taking profit at these highs right now. You can easily see those bulls, right, taking profit at these highs. We now know there is some rejection at these highs, and the better strategy now, instead of trying to buy a pullback here and buy right into that market's objective, now what I want to do is wait for a nice deep pullback and look for buying opportunities back up to retest that high. So as you can see here, right, market objective being right back to retest that high because we get that strong move and we go back to retest it. That was the plan from last night's newsletter, and boy, did it work well here, right, in the markets today. Now we go strong move up again. We pull back. What do? We're right back to the market's objective again. Right? So notice how the markets are fractal here. You get the big one, right? There's the big one. And then, of course, you get the small one. There's a small one. Bottom line is this is a little bit too much, too much resistance, a little bit too much of a profit-taking area. I want to see which way do we go. Do we go down or do we go up? Right? If we go down, now what I want to do is I want to try to find some levels of support. The market's bullish, so I'm trying to find some support levels. There's a support level. I didn't want to draw this too tight. If you're a client of mine, you might be saying, Joe, don't you usually draw from wick to body? Isn't that usually how you draw them? It is, but I don't think it's going to give us enough space off of that high to get that deep pullback. So I'm purposely drawing it wick to wick, just because I really don't want to use the one wick to body. I'd almost rather not even know it's there, to be very honest with you. Ignorance is bliss when it comes to trading. A lot of times I don't even want to know some of this stuff is there because out of sight, out of mind. So the bottom line is I can see we have a level of support. It's a bull market. I want to buy at support. What other support levels do we have here right now? Well, with that double top, I can call this a trading range. Okay, anytime we hit the market's objective and we bounce off it, it usually results in a range. And so, of course, anytime I have a trading range, right, I can take that trading range, I can copy and paste it down, find support there, copy and paste it up, find resistance there, right? Makes sense? So now we've got a support trend line, and we've got this, right, little battle zone, little range expansion level here at 51.67. So those are key levels of support. They're just off the high. They're just below that top of that trading range. Now, let's play that game, right? What if price goes up? What if price goes down? What if price goes sideways here? I obviously want to be a buyer. It's not a bear market right now, so I do want to be a bull here. And so what I look for here is I want to see a pullback. If we can get that market to pull back here now, I can get that moving average coming down. And when the moving average comes down, I can look for those sellers to sell off of it. And then once I see those bears try to sell off the moving average now, again, it's not a bear market, it's a bull market. Once I see those bears try selling off of that moving average, now I know exactly where their stops are, and I can look for one of my favorite patterns, right? A failure pattern. Now that failure pattern will easily trigger with the right signal candle, right above that moving average. Once we get the market then running higher here, I don't want to chase after it, right? There's no money to be made in chasing after markets. I'm going to find a new channel, right? And I'll look for that pullback now off the moving average, right? And off the low of that hidden channel. All right. We call these failure setups, and then we call these pullback setups. And obviously, it's not the setup itself, it's the location of that setup that really means the most. Now, you may also see a two-legged pullback. Another one of my favorite patterns is a two-legged pullback, right? We may see it 1, 2. Okay, the word two-legged pullback, or the nickname two-legged pullback, simply comes from, usually it's 1, right, 2 strong moves down. If we get that trend line, right, get that trend line formed on the way down, we can use that trend line now as a level of support, and I can buy that one, right? We call those two-legged pullbacks, or the 2LP. Again, it's not so much the pattern, it's the location of that pattern that really makes it significant. Now that's if we get that pullback. What if it goes sideways here? What if it keeps going sideways? If it keeps going sideways, not much changes. When we have a range like this, what do? We look for the 2-try failure pattern. 1 try, 2 try, and then back up from there. So once we see the market continue to rotate sideways inside of this range, then we know it's time. Look for those bears to try once, wait for the pullback, let them try twice, and then once we see those sellers start to struggle, we can look for that buy going right back up to retest the high. Now here's a question, right? What if it keeps going higher here? What if this comes out and we just see a big green candle, right, blasting off overhead? What do we do then? What's the plan then? Well, now we're going to call this a spiking channel. So imagine now we see that big spike up. Now what I'll do is I'll grab that line, right? And we'll look for that buy now. This will not be a range anymore. We'll look for that buy now off of the low of that channel. We may also see it really punch higher, right? If it really punches higher here and we start seeing something like a wedge formation, right, as it goes higher, I'm not going to chase after it. What I'll keep looking for is one of my favorite patterns called a trap pattern. That trap pattern will come. And again, traps are best used when the market looks blistering strong, right? When it's really ripping higher here. I don't want to chase after it. I want to wait for those traps below those prior swings. Where's the objective at that point? Up at that measured move, right? There's our big objective at that point, because we got that big strong move higher, right? That big strong move higher from yesterday, and then of course that measured move, that becomes our big objective. And if you recall, that was the same target zone that we talked about in last night's newsletter, right? If you recall. So it's all hanging out up there around that 53.35. Now, one more thing here to make sure we cover here tonight, because I want to make sure you know both sides of this market. What would a bear market look like? Well, I think first of all, a bear market would have to get and hold below that trend line. I don't think you're going to be able to take a bear market seriously here until we can break and hold below that trend line. What I always look for with a reversal is I look for the 1, 2, 3 reversal pattern. Now the 1, 2, 3 reversal is pretty simple. I'm looking for a strong move against the trend. I'm looking for a pullback to the moving average. And if I can get that pullback to the moving average and then see a strong jump off the moving average, that will now tell me I have that 1, 2, 3 reversal. It's got to pull back to that moving average. You want to make sure it holds that moving average and really jumps off the moving average. I know it's tempting to want to sell that pullback, but remember, guys, in a bull market, at a level of support, it's more likely that fails, right? And guys like myself are going to be buying that failure right back up into that retest of the market's objective. If we do get that strong move down, now we can call this a bear market. I'm going to find the new hidden channel. I'm going to mark up that prior reversal line, and then we'll look for that sell going back down again, right? That hidden channel that comes in off of that new lower low. So where's our target? Where's our market objective, right? If we get this sell off the high, I would imagine, right, that market objective is pretty easy back there at $50 a barrel, right? That big round number. So look for that $50 a barrel if the bears can take control of this tomorrow, right? In the meantime, though, we are bullish. And also, too, we've talked about two-legged pullbacks. We've talked about failure patterns, pullback patterns, trap patterns, the market's objective. But I'll tell you, I talk a lot about the market's objective in my free trading class. And if you'd like to learn more about all of my favorite patterns, all the entry patterns, how I run my trading business, right? Grab that free trading class in the upper right-hand corner. I'll put a big red button right below the video tonight on our blog as well here at sidewaysmarkets.com. I'll also send you hundreds of examples of real patterns directly from our trade room. That way you can see how those patterns work on a real chart. So if you're brand new here with me and you want a deeper dive into this entire strategy, make sure you take me up on that offer with that free trading class. That's the oil. Let's keep going. Oil is looking great here with a nice bull run up to that market's objective. Don't want to buy high here though right now. I want to make sure we buy low. How about some S&P? How about some S&P here right now? S&P is retesting yesterday's high, which of course is the market's objective, which tells me it's a little too high to start buying this market right now, isn't it? Probably going to start seeing buyers take profit up here. Knowing this, my plan is to wait for a deep pullback off of those highs and get back to the low of this hidden channel. And of course, hopefully that rising support trend line. Now, if I zoom out on this a little bit, I just want to make sure I show you kind of the big picture here so you can see where this big channel is coming from right now. We really have kind of just an impressive, right, big bull channel here. You'll notice as it rotates back and forth right now. And the reason why I'm making sure to tell you this is because guess what? The top of that channel is right overhead. Now, what is the top of the channel? The top of the channel is the market's objective, right? So we are right near the top of that channel. And what do we expect at the market's objective? Profit taking, maybe a reversal altogether. So we don't want to be buying into the high of that channel. I want to make sure you know where that channel high is, because even if we do start pushing higher here, tonight, tomorrow morning, we got to be careful because we got the top of that channel, another objective, right, that we don't want to buy into. But for now, though, let's zoom back in, though. Now that you see the big picture here, right, let's not forget here either, right, we got that big move up, that nice deep pullback, and where are we? Oh, we're right back to the high again, right? Market's objective, right? We're back to the objective. We're back to the mission accomplished, right? We crossed the goal line. The buyers are spiking the football right now, right? And of course, they should be taking some profit here. So of course, we're going to get ready here right now. We're going, all right, are we going to keep going, or are we going to pull back? Usually once we get to the market's objective, we usually pull back. You can see examples of this, right? Strong move up, pull back, retest the market objective, pull back, retest the market objective, right? In a trending market, this is very, very common. So we go higher here, right? We're back up to retest that high. That is the objective right there, right? Just below that 2600 area. So we got to be careful, right? What does that tell me? We've really got to be careful. We don't want to buy too high up here. We're definitely bullish, but we want to buy at support, right? Not buy at resistance. So where can I find some levels of support? Well, let's get the measured move off of there. You can see how that measured move is calculated. Where can I find some levels of support? Well, anytime I find myself running out of open space overhead, I always look for traps. And so traps, of course, below prior swings. That 85 and a quarter is a major level of support. What I really like, though, is if I line up those highs, bring it down to that low. You'll notice I did shave off that bottom. I opted to use, right, the wick at the bottom of the first one, right? That fit a little better there with the midline, and so that becomes my channel. That's going to be a great spot to look for buying opportunities. And then, of course, I've got this trend line I'm drawing up here as well, right? That trend line, combine that with that, right, with that prior swing, and that really creates, right, that nice buy area for us. We're bullish. I want to be a buyer at support, but to do that, I need to get a deep pullback. Now, of course, that deep pullback that we get here will probably end up giving us a two-legged pullback, right? So the trend line comes down overhead. Once we have that two-legged pullback, then I can look for that trend line to be used as a key level of support. Again, that's the two-legged pullback pattern. Or, right, we may see something just like this, right, where it pulls back, it comes back to the moving average, the sellers try to sell it, right, and then, of course, we can just buy right into those failures, right? That's the failure setup, right, off the low. And then, of course, if we get lucky on that, we get a pullback, get that pullback now, and off of that low, right? Get that pullback off of that low. So again, that's the failure setup into that hidden channel pullback, right? Into that first pullback as we rally higher. You'll notice, right? I'm not gonna encourage you to buy up here because again, you're buying high. You're buying near the objective, right? If we pull back off of this high, right? I want to buy down here. Right? I don't want to buy up here. I don't want to buy up here now because as we get closer to the high, what is the high? The high is the market's objective, right? That's what we expect all the buyers who got in down here, we expect them to take their profit up around those, right, up around those highs. So that's the idea behind, right, the pullback here. Again, either going to be that two-legged pullback, 1, 2, and then use the trend line, or it's the strong move down, right? Get that moving average failure into pullback and go from there, right? We'll look for those patterns tomorrow morning in our trade room. Now, what if we go sideways here, right? What if we go sideways? What if we don't pull off the high? I wouldn't be surprised. I wouldn't be surprised. We're kind of all waiting on China-U.S. trade talks tomorrow, so we'll see how this goes. We'll see if if we trade sideways here. And anytime we see a sideways range, we always know, right? Take the size of that range, copy and paste it down, create that level of support, and then we'll use the 1, the 2, use that 2 try failure, let those bears try once, let those bears try twice, and look for that buy, right, going back up into that trading range. Now, as I mentioned earlier, right, there is the top of that channel, and the top of that channel lines up nicely with that measured move. Sometimes what happens is we just keep grinding higher and grinding higher and grinding higher. If that's the case, we'll look at this as a spike and channel. And of course, as we talked about last night on the Nasdaq, right, we always look for that nice deep pullback. And again, you want to focus on traps because as we run out of open space up here, it's those bear traps, those traps below prior bull swings, trapping those bears on the wrong side. That's what's going to give us the most punch, right? That'll give us a chance to buy low in a nice risk small, right? Nice earn large environment, right? If we can just focus on staying patient for small risk, big reward opportunities, it's very difficult to lose money in the long run. The hard part is, though, we lose control of our emotions. We chase after markets. We don't stay disciplined, and we end up buying high and taking a low risk, low reward opportunity as well. So if price keeps going higher, we're looking for traps. Price goes sideways, looking for failures. If price pulls back, right, looking for two-legged pullbacks and pullbacks to go back up to retest the high. How would this market reverse? What does a 1, 2, 3 reversal look like here right now? Well, a 1, 2, 3 reversal, look back here and see how they go strong, move down, they pull back, and they try, but they just couldn't keep going. See, that's your cue right there. These situations we saw back here, these happen all the time, right? Like we saw earlier, right? Strong move down. If they could keep that going, they're fine, but they can't. So, of course, a failure, and it rallies back higher again. So you can't just sell after a strong move down, because we see lots of strong moves down, right? And those dip buyers, they come right back in to buy it. So what I'm looking for is I want to see a nice strong move now. If we get that strong move down, that's 1. 2 is the pullback, and the third step of that of that 1, 2, 3 reversal is that new blast off that low. Trust me, when it breaks off that low, you're going to feel it, right? It's going to feel like the buyers have completely given up on it. I'm going to mark up that low. I'm going to mark up that low. And of course, we'll look for that sell. Now, where are we trying to go with that sell? That's the challenge here, right? Where would we be trying to go with that? Where's the objective? In other words, let's zoom out real quickly here. And if we do reverse off of this high, right, we got the 1 up, 2. If we do reverse, this becomes a big trading range. And I would imagine if we get that reversal, we're looking somewhere down around this 25.70 area, which means you're going to have to get to it quickly if the market does give us the proper 1, 2, 3 reversal. Okay, you want to always know where is the market's objective. You know, I use a rule-based strategy in my trade room, and we always use a checklist. And one of the rules on this checklist is, where's this market trying to go? Right? Where's the objective? If you don't know where the objective is, you've got no business trading, because you could be trading directly at the market's objective, right? If you don't know where the market's objective is, you're probably sitting right on it and probably don't want to be doing anything except waiting for more information. And again, speaking of trading ranges, market's objective, the 1, 2, 3 reversal, you can see hundreds of examples of these patterns. Grab that free trading course. It's in the upper right-hand corner, right? I'll also drop a link below the video tonight, big red button below the video tonight to grab that free class. People love the free class right now. I get so much great feedback regarding the free class. And so hopefully you guys will like it as much as everybody else does. It will definitely give you a great deep dive into this trading strategy. So now we get the S&P is in the books. That looks good. How about some Nasdaq? Right? Now, Nasdaq is a little bit similar, right? Very similar here to the S&P here tonight. Nasdaq is obviously bullish, and we're only a few points away from retesting the high, which of course is what? It's the market's objective, right? Which tells us to avoid buying into this major level of resistance. So knowing this, right, I want to focus on buying as low as possible and looking for buy setups using this rising support trend line coming off of these lows. And of course, I've got this hidden channel, right, drawn off of those highs. Now, once again, take a quick peek here at the bigger picture. Once you begin to learn how to identify, right, very strong move higher there. They get the deep pullback. Boy, we talked about that little tiny gap, right? That was obviously what everyone was looking for, almost like a redo, right? Let's go back up again. What a great example of that was from last night's newsletter. But the bottom line is strong move up, deep pullback, and where are they trying to go? They're trying to go back up to retest that high at 66.45. It's a very basic idea, right? This is not rocket science. It may take a little bit of time to learn it, but this is definitely something that anybody can learn. Once we know where the objective is, again, that is major resistance in this bull market, we'll likely see buyers start taking profit. We'll likely see sellers start to try picking tops, right, and try to sell off that high. I really don't want to be a buyer up there. And really the challenge here is that even if we get through that high, we still have this measured move up here, which is why I'm shading this in a red rectangle here, because this is kind of the no trade zone. right? We kind of have to see what happens up there, and we'll obviously put the plan together here in just a few seconds here. So very difficult to be buying high here right now. It's obviously a bull market. I want to buy at support. So of course, the most aggressive way to do that is to use this rising support trend line. The Nasdaq loves wedges, right? A wedge, right? So wedges, of course, are my terminology may differ from your terminology. A wedge, in my eyes, is a triangle that has some sort of direction to it, right? That would be a bull wedge, whereas this would just be a triangle. So when I say wedge, right, wedge is a triangle with some direction. The moral of the story is whenever we have a wedge that's getting a little bit too tight, we usually see price pull back and give us a nice deep pullback to buy before we get to the completion of that wedge. So we're starting to see what might be a bit of a wedge here on the Nasdaq between these two, right? That wedge there, right? So as we start getting narrower, don't be surprised if we get that deep pullback, right? And that nice deep pullback later in the session, right? Tomorrow morning. So we know where we want to be a buyer here. We know we want to be a bull. We know we got to be careful buying high here. What's the plan? Now, first things first, we're looking for something just like that, right? Just like that. Nice deep pullback. Let those sellers try to sell that moving average, right? Let them try to sell the moving average. Once they start seeing signs of failure, we'll look for that buy. And then, of course, from there, right, we'll look for that pullback, right? Look for that pullback there from there. Okay, that is the failure pattern, of course, into that pullback pattern. And again, you can see an example right here, right? It's just a 1, 2, there's your failure, there's your pullback. It's a very easy pattern. You know what I mean? These things happen all the time. 1, 2, or you could take it as 1, 2, straw move up, pull back, and go. So lots of different variations of that pattern. And remember, it's very rare that we see a perfect textbook pattern, right? The only textbook patterns, they happen in textbooks. So you have to be comfortable with being a little bit uncomfortable. And that's one of the great things about my trade room, because in my trade room, I'll make it easy for you so that you don't have to worry about things being perfect, right? What I do in the trade room is say, you know what looks like a duck and quacks like a duck and smells like a duck, it's probably a duck. In other words, if it looks similar to the pattern, it'll probably act like that pattern because people will be trading it like that pattern. So I want to see a nice pullback. Let those bears try twice, selling off the moving average, right? Failure into pullback, and then back up we go. Or maybe we get, right, something better here. Maybe we get a deeper pullback. Maybe it's a two-legged pullback, 1 and 2. We can use that trend line going back up. That's an option. Now, how about a range? How about a range up here? We do see these quite often, right? Look at oil. Oil went up to retest the market's objective, and it's going sideways now too. If we have a trading range, what do? We take that trading range size, we copy and paste it down. We look at that range expansion level. Let's say it's right there, for example. Right? And I can still combine this with that rising support trend line. But most importantly, though, whenever I see a range on the chart, the range takes precedence. I'm looking for 1, I'm looking for 2, and I'm looking to buy back up, right? Look for that buy going back up into that range. Once those sellers try once they try twice, we'll look for that buy going back up from there. Now, what if we keep going higher here, right? What if we keep going higher? What if we keep grinding higher? Well, now we're grinding. It's very obvious that buyers aren't giving up on this. So what we'll do is we'll mark up those prior swings and look for a pullback, right? Look for some sort of trap off of those highs. If we start seeing that these buyers aren't going to play nice and let us get that pullback, we'll wait, and eventually we will get that trap. Just as long as we can get it before we get to that measured move. Make sure you get that before you get to that measured move, because after that measured move hits, once we get that measured move, then we always look for that deep two-legged pullback and a retest of that high. So if we do see the measured move, look for that deeper pullback, 1, 2, let those sellers try, and we'll look to buy into those stops right back up again. All right, guys. And again, on a 1, 2, 3 reversal, 1, 2, pull back to the moving average, right? First leg, 1, 2 is a pullback to the moving average. 3 is a strong move off the moving average. If we get it, mark up that low, mark up that high, right? And of course, we're looking to sell off that high, right, with a hidden channel. You know, I love hidden channels. Hidden channels, it's always kind of funny because I always get comments on these YouTube videos, people telling me that my channels are wrong. But, you know, it always kind of speaks for itself because it always seems to pull right back to those hidden channels, man. I love hidden channels. They may not look right at first, but I'll tell you, boy, they make some great levels of support and resistance. You can find, right, you can find more information about those hidden channels. Just grab that information, right? Grab the information icon in the upper right-hand corner. Grab that free trading class in the upper right-hand corner. Grab the big button below the video tonight, and you'll learn all about how I like to use those hidden channels. They are definitely one of my favorite parts of this technical analysis we use every day in our trade room. How about some gold? Looking at gold here right now, we are moving hot here right now, right? Bearish. Gold is bearish. We're trying to go back to the lows of the range. Yes, the same range. Yes, once again, this gold is still doing great for us here this week. Gold is bearish and grinding its way back to the low of that range again, which tells me to look for sell setups at the high of this channel tomorrow morning. The low of the range is the market's objective, and it's just a few points below us right now. So we need to avoid chasing this move higher and focus on selling as high as possible until we complete the mission back down to that low. Let's first start off here by looking at this bigger picture here right now. This is that big range we've been watching on gold here, and I know it's ugly, right? It's relatively ugly here. This is a fast time frame, but you can see we're rotating back and forth, back and forth, back and forth, right? We talked about the move lower, right? That was earlier in the week, right? We just finished up the move going higher. And then, of course, once we got back to that market's objective, that's why I said if you got caught buying into that high today, right, always important to know where's the market's objective. If you listened closely last night in the newsletter, I said very specifically, we've got to get that buy before we get to the top of that range. Once we get to the top of that range, it's no longer a place to buy anymore because, again, right, that is the objective, right? We don't want to be buying into the high of that trading range, and look what happens, boy. The bottom just completely falls out of it. Market turns, big strong move off of the high, and we're now headed back to low of that range. Here's the range again. We go from the low to the high down to the low, and knock knock, we are right there knocking on the doorstep here right now for that trading range low. So that, of course, right, is the new market objective, right? That's the new mission accomplished. And so I don't want to be selling into that low. So we're bearish. I want to be a seller. I just have to be very careful if this market keeps going lower. I really want to make sure I try to sell this thing, right, as high as possible. So keeping our eyes open on where that major level of support is down here. It also lines up with a measured move. This is going to be a big time support level down here. It may not hold exactly, but I will not want to keep selling into that 1284.8 until we get more information. So we're setting up here for another one of those hidden channels, right? One of those channels that doesn't make any sense. You know what I mean? Right? I'm sure a lot of folks will look at this and go, wait a second, that doesn't seem to be a very good looking channel. You're right. If I was to draw the channel, I would probably draw it like that, right? And that would be kind of your classic, channel. But the problem is that doesn't help me with providing a big level of resistance. What I'm looking for is I'm looking for levels of resistance. I don't need my channel to be pretty, right? We're not going for vanity here right now. He or she who has the prettiest charts doesn't win. There's no first place ribbon for the cutest looking channel, right? What I want is I want a reliable level. And usually when a market turns directions like this, usually you start drawing off these lows up to that high, right? And you'll get that channel. Okay, I didn't draw it off the high like that, right? I'll draw the channel off of those two lows up to that high now, and that will create that channel high, and that tells me where to sell. So I'm going to keep doing the same thing tomorrow, right? We'll look for that low, and again, I want to sell high, right? Because I've got that low right there. I don't want to sell low. I don't want an aggressive trend line coming down. Yes, I realize there's probably a trend line coming down off the high like that. but I don't even care about it. It's irrelevant to me. Right? I'd rather not even know it's there. It doesn't mean anything because I'm not going to sell off of that. I'm not going to take that short. What I'd rather do is I'd rather just eliminate all the levels on this chart that mean nothing to me and focus on stuff that's going to give me the chance to sell high. So what I'll do is I'll pin it back to these highs, right? And I'll wait for price to pull back. That's a nice, deep, healthy pullback. Now I can sell high, right, with a nice small risk and a nice big reward. Okay, so don't be fooled by the fact that this channel may not look right. You're right. It's a hidden channel. Right? It's meant to not look right. It's meant to look like this market's running higher here. I want these buyers to think they've got this beat, and then I want those sellers to come in, right, and crush them back down again with that failure pattern. And then once we get that strong move down again, then of course the moving average comes over, right? And we can look for that pullback pattern off the moving average. Again, failure pattern, pullback pattern. Does that make sense? Right? We're not looking for pretty. We're looking for profit. Okay, we want to get something that's going to give me a nice high level of resistance that I can sell off of that high. So if the price does pull back here, again, I want to go up, let those buyers try to buy the pullback to the moving average, let them fail, right? And we'll sell this thing right back down again. That's the plan there if we get the pullback, right, as we go. Now, what if price keeps going lower? That may be the case. This may definitely be the case here. We may see it keep on rolling. If it rolls lower, I got to get to those sells before we get down to that low. So if it keeps rolling lower here, you know the plan, right? Traps, right? Call me Ricky. And of course the trap line up right with the top of that channel. Okay, try to get that trap right up around that channel. Okay, so if we keep going lower, it's traps. Maybe it's going to be a failure if we get it, but usually once we start getting down towards that low, there's that fear of missing out that hits the market, and you start being pretty good for that trap. Now, once we get down to that low, then what are we doing? Then what's the plan? Right? We'll use the nested 2 try. Go back up to this area here, right? Back to last night. We go back up, we hit the high. We're very much bullish at that time, but we don't want to buy here. What do? We let them try once, we let them try twice, and we sell back down. Okay, let them try once, let them try twice, and we sell back down. Same thing here. If we go back to that low, okay, I don't care how strong that breakdown is. Wait for it. It'll come back. Let them try once, let them try twice, and if we get lucky, we'll get that buy right off that crown reversal trap, right? Let them get the move down, right? Leave that runner on your short position and see as much as you can get out of it. Then make him try once to keep it going. Make him try twice to keep it going. And if you can get that little trap down here, oh baby, that's always a great setup for a buy going back up. And again, who knows, this could go right back up and we could be tomorrow night, well, not tomorrow night, we don't do the newsletter on Friday night, but by Monday, we come back going, hey, we're bullish again, right? Easily could happen. Okay, that's the plan on the gold tomorrow. We're watching for this move going lower. The one thing that you're going to want to be really careful with here tomorrow is going to be if we go up, right, and we can't get out of this middle. If we end up sitting in the middle, again, we're kind of waiting on China-U.S. Trade talks right now. So if we do get sucked into the middle, we talked about this earlier this week, right? We've got this range broken to thirds. If it gets stuck in the middle third here, we're going to have to be very careful, right? If we get stuck in the middle third, we'll buy low, we'll sell high, and we'll have to play that by ear tomorrow. So make sure you tune in tomorrow in the trade room, and we'll play that by ear once we get there tomorrow morning. All right, wrapping things up here. Boy, oh boy, we're getting late here in the video tonight. Wrapping things up here on the euro. Ooh, I love this chart. Now, tomorrow, obviously, again, we are coming out, right? We're listening into those trade talks tomorrow. So euro will definitely be something that we have to pay attention to tomorrow morning if we do hear from China-U.S. trade talks tomorrow. But for now, though, we know that euro is trading at the low of a range expansion this evening, which means I'm looking to buy the lows with a target back up to retest the high. The challenge right now is the momentum is bearish at this point, but it tells me to wait for the sellers to try a couple times before we start to look for that buy going back up to retest the high. This was a tricky one because Euro looks pretty bearish at first glance, doesn't it? But after looking at this a little bit closer, it's easy to see we have a range up here. What always gives it away is when you add the range expansions on and they just hold, right? They hold, beautiful hold there at that range expansion. And then you bring it down and you'll notice where we are right now. We're right at that range expansion right now. So yeah, we might be bearish and we may end up running more here. But for right now, though, I can't sell this market. I know it's bearish. I understand the momentum is bearish. But the problem, though, is we're sitting right on that range expansion right now. And how many times have we seen a strong break below a range just to see it go 1, 2, and then whoop, right back up into that trading range? Where would the objective be? The objective would be back to retest the high. See, strong move up, pull back, right? There's your market objective. In a trending environment, the objective is almost always to retest the high or the low. So the key component right now is this falling resistance trend line. Okay, couple ways you want to trade these trend lines. Most important thing is we have a range. I want to buy going back up into that trading range, at least for now, until we know more. I want to buy going back into that range. So how do we do this? Well, much like we talked about on gold, right? Gold's going lower right now. If I want to buy the low of that range on gold, I need to wait for 1, 2. I got to wait for those bears now to try once, right? Try twice, and then I'm looking for that buy here. And again, we talked about this on gold earlier, right? I call this a crown reversal. 1, 2, 3, right? Low, higher low, lower low. We'll talk more about the fine details of this pattern. You wouldn't take this pattern in every situation, right? But they happen quite a bit during range-bound markets. So the bottom line is I'm looking for that second try to fail so I can buy it going back up. Now, sometimes we don't get that pullback, right? Sometimes it just blasts higher here. And if that happens, I now know it'll become a spike in channel, and I'll look for that little trap, right? If it does blast higher there and doesn't pull back, right? Look for a trap. That's the next best option, right? I'd like to use the trend line, but sometimes the trend line, sometimes we just don't get the pullback. It's the way it goes. Welcome to the world, right? We don't get what we want all the time. And so sometimes when it does kind of blast higher here, you can feel it, right? You can feel these sellers walk away and then look for a little trap. This is the same basic principle, right? We're letting the bears try once. We're letting those bears try twice. Just going to make sure we buy as low as possible. And anytime we're worried about buying high, we look for traps, right? That trap setup, right? Same pattern we've talked about many times before, right? Trap pattern there. All right, guys? It's a 2-try failure into a trap low for that buy going back up. Now, if we do end up going back up and we get stuck inside the range, don't trade the range. Wait for it. 1, 2, back up we go. Right? 1, 2, back up we go. And again, if we do end up back at the highs here, right? What's the plan? The plan is nested. 1, 2, failure back down. Do you see this pattern here, right? You see it right here? This pattern is it's the same, but it's the opposite, right? Opposite direction. You get the 1, you get the 2. That is a bearish crown reversal, right? That's a bearish nested 2-try. Right? See that little pattern right there? The same thing we're looking for the opposite side. Strong move down. 1, 2, little trap low. I hope you can see that those are the same thing, right? So you can almost model it after that over here. Okay, so we'll definitely be watching for that tomorrow as well, right? As we go higher, we know where the market's objective is. Once they get the market's objective, 1, 2, back down from there. All right? Get below the moving average. Second try fails. Back down to the back down to the range. All right, guys. Last but not least here, though. Last but not least, what would it take to be bearish? If we get one more strong leg off of this area, I can't call it a bull market any longer. I'm going to have to call it a bear market. What I'll do is I'll probably start looking for a hidden channel like that, right? A little, major channel there, and then look for that sell up around the high of that major channel. Again, we're not going for pretty, we're going for profitable, right? We're not going for pretty, we're going for profitable. So I'll find that, I'll use these new lows here to find a hidden channel to sell off of that high. Where would the objective be for the sellers? Great question. Back to that big round number, 15,000. The euro loves to go from these big round numbers of 16,000, right, back to the next big round number at 15,000. Big objective at 15,000, right, back down for those sellers. Boy, oh boy, what a great video tonight. Hope you guys are enjoying it, right? Hope you're learning with it. Hope you're earning with it. If you love the video, give me a thumbs up. Tell me what you like. Tell me what you hate in the comments section. I always want to make this video better for you guys. As you can see, I invest a lot of time each week in providing this service on our YouTube channel. So I'd love to get your feedback in the comments section. And then don't forget, if you want to learn more about this trading strategy, right, go right to the website here at schooloftrade.com. I'll put all the links in the description or below the video on our blog. Grab that free trial. As part of the free trial, I'll shoot you an invite. Come join me in the trade room so you can see how this strategy works. Don't forget, this weekend I'll be available via email, via telephone, or on Skype. And as always, right, you can always learn more about our 3 levels of membership and hit me up on live support anytime you have any questions. Guys and gals, it is always such a pleasure to be here with you. Hope you had a great week. No newsletter tomorrow. We will be in our trade room at 8 o'clock Eastern Time, and I hope to see you there with me. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.